is the difference between building a generational fintech and building something that's just slightly better, faster, cheaper than what came before.
The views expressed in this podcast are the speaker's own and are not the views of This Week in FinTech or any other person or entity. The content provided in this podcast is for informational purposes only and should not be construed as legal, business, tax, or investment advice or a recommendation, solicitation, endorsement, or offering by me or anyone else for the sale, subscription, or purchase of securities or for investment advisory services of any kind.
But first, a quick message from our sponsor. Hey, FinTech friends. Are you ready to scale your FinTech product? Introducing Newline by Fifth Third. With Newline, you can launch payment, card, and deposit products directly with Fifth Third Bank. Newline combines the power of a top 20 bank with an API-first technology platform, unlocking the next generation of embedded finance solutions. Set your product up for success with a reputable bank partner and enjoy the best of both worlds, innovation and financial strength. It's time to raise the standard of embedded financial solutions with a platform designed for the enterprise. Learn more at newline53.com. That's NEWLINE53.com.
All right, Bret, welcome to the This Month in FinTech podcast, live at Money 2020. It's great having you at FinTech's biggest week of the year. How are you doing today?
Doing great. Are we going to spend this whole podcast talking about Jets and Niners or going into AI?
Well, unfortunately, you have to jump into AI. I'll get you on a sports podcast next. So I'd go through your background, but I don't want you blushing on these nice HD cameras we've got. So let's get to it. Starting with Sierra, can you take us through the current product suite and who you're serving?
Yeah, so at Sierra, we help companies in financial services and elsewhere build AI agents for customer experience. Mm-hmm. For some of our customers, that means replacing an IVR system. So you don't have to wait on hold and press 3 for service to actually answer a phone with a multilingual AI agent. Mm-hmm. For some, like Rocket Mortgage, it can be a digital chat experience. If you go to rocket.com and you can use Rocket Assist, that's an agent powered by our platform. So we're helping people do everything from report fraud on a credit card to refinance a home to simple stuff like recover a password too. And I joke we're doing technical support for printers, copy machines, CAT scan machines. We're helping kids recover their account for some of the most popular gaming apps in the market. And then we're helping with home refinancing. So it pretty much runs the spectrum of experiences. The whole idea, though, really simply put, is we think particularly in financial services, every company's AI agent is going to be as important as their mobile app or their website. I like to think of it as your primary digital touch point in this world of AI.
Makes sense. And we thought we'd get flying cars and AGI, and instead we have password recovery from AI.
Well, look, you joke, but let's just say you're locked out of your bank account. Mm-hmm. If you had to wait on hold for 15 minutes versus just solving it right then, it's actually one of the most important things in the world. So, the simple stuff matters as much as the really big stuff. And I think what's neat about AI agents is they're immediate, they're always on, they're 24/7. Mm-hmm. I always talk about this, but a phone call for most, let's say you're a bank, and you staff your U.S. call center in the Philippines, the typical cost of a phone call might be $15, give or take. Most interactions in financial services aren't worth $15. So you end up with a phone tree, self-help portal, and it's fine. It makes sense economically. You just can't afford to do it. But as a consumer, I just want it fixed. Right. And so if you can provide an AI agent at 1/10 the cost and actually meet people where they are, whether it's resetting a password or something more significant, I think it's the greatest expression of empathy for your customers in a lot of ways. And that's pretty exciting.
Yeah, but then when all customer service, I think in a few years becomes AI forward, what does that look like? Especially we have companies like Nubank that try to differentiate their brand on great customer service and wow experiences.
I think at the end of the day, you're still going to wow your customers with great products, great services, ease of use. And I'm really proud that we serve both fintechs and traditional financial services firms. So, we were talking earlier about working with companies like Ramp, which 90% of all their customer service interactions are automated
90?
with their agent. 90. It's incredible. And what's really neat about Ramp is it's not just service, it's, Ask AI. It's the features built into the product. And I think that's where customer experience differentiation is going to come from. It's going to go from better customer service to proactive to always on. And I think, especially if you think about your relationship with a financial services firm, it's a pretty intimate relationship. They know your life goals. If you're saving up for a house, a car, you're trying to pay off your student debt, whatever it might be. This is something where going from helping you reset your password to proactively helping you achieve your financial goals is the difference between building a generational fintech and building something that's just slightly better, faster, cheaper than what came before.
Right.
And it was interesting. I was just on stage with Sean Malhotra, the CTO of Rocket Mortgage.
Congratulations on the new partnership.
Thank you. I'm really excited about it. I love their mission. I love the company. I think Sean's one of the most remarkable CTOs I've ever worked with.
High praise.
But he had a really interesting way of articulating this, which is I think so much of AI right now is taking what we do now and automating it. And it's not really the idea. When these agents have perfect access to information, they can process things 1,000 times more quickly. I think these agents can start to do more than they're doing today. And I'm really excited for probably 2 or 3 trends. One is true multimodal, meaning making these agents available for voice and digital chat. Number 2 is personalization. These agents not just sort of handling a transaction or a conversation, but actually knowing who you are, kind of knowing what you want before you do. And number 3 is being proactive. I think a lot of agents today are conversations you as the consumer initiate
in a panic.
And what if you are traveling and if you're going to get about to get a roaming charge from your mobile
this just
operator?
Happened to me. So this is very
well. There you go.
Yeah.
What if the AI agent for your telco reached out to you and said, "Hey, you just landed in Germany. If you'd like to switch to the international plan, here's all the benefits. And oh, by the way, you'll save $100 in roaming charges." Talk about a perfect value proposition. It's probably better for everyone involved. So I would just say, multimodality, personalization, proactivity. I think that's where the puck is going, as Wayne Gretzky would say. And I think that's really where I'm excited to see people differentiate on customer experience.
Yeah, I really would have loved that product. I was overseas and got a $700 phone bill and didn't find out until I came back. And then I'm on the phone begging, crying for a wipe charge. And while we kind of have our crystal balls out, software as a whole is facing an innovator's dilemma on agents, as you mentioned, and also outcomes-based pricing. Sierra has been at the forefront of each the last 2 years. How will agents and outcome-based pricing be changing software going forward?
I think the shift is seismic. I'm a student of the history of software, and you went from mainframes to sort of like somewhat packaged solutions. And that's when you buy Windows 95 and then buy Windows 98, or you buy a new version of Oracle every year in the B2B context. And then software as a service emerged with the internet. And it was really 2 things. It was a technical change and a business model shift. So the technical change was you just run the software in a web browser. But the implications of that is there's just one version of the software. You didn't have to install a new version. It was just always up to date. So that created the business model shift, because if you're not buying a new version, what's the revenue model? And so you ended up with subscription-based software, which is now the standard for almost every, all B2B software anyway in the world. I think with agents, the difference between an agent and traditional software is agents can actually autonomously, without human intervention, complete a task. And if you think about places where, someone's doing a job, you often pay for the job well done. And I think a salesperson is paid on commission, or, if you have a marketing firm, you might pay for a lead. Well, why not pay for agents the same way? And that's the whole idea of outcomes-based pricing. And for Sierra, that means our agents will only get paid if they resolve the case successfully. If they have to escalate to a person, it's free. But I think the change is deeper than that. And actually, I'm excited for it because if you talk to someone who runs procurement at like a big company, they've been presented so many ROI presentations.
Oh my God.
And it's like, if we make all your salespeople 2% more productive. And let's just put it this way, success has 1,000 fathers, failures an orphan, as they say.
Always.
It's impossible to itemize a productivity enhancement. So no one really knows if it worked. I think it will actually align software vendors with their customers, where we can go from being vendors to partners. I think it will mean people will know the value they're getting from their software. And I think just like the move from software, perpetual license software to software as a service, I think will lead to sort of a changing of the guard as well. Some incumbents will make the change, some won't.
Right. And on that note of changing of the guard, on my walk to this booth here, I must have passed at least 6, 7, 8 companies promising the same as Sierra. When you're in market.
In this conversation, 2 more were founded.
Yes, exactly. Yeah. Check the YC badge.
Yeah.
Why Sierra? What makes you unique in market then at the enterprise?
3 things. So one is our agents work more effectively. And I know that sounds trite.
I've heard that in every pitch this year.
Well, for us, it shows up in the metrics. The customer satisfaction score for Clear's agent, you probably use Clear on the airport flying here. It's well above 4.5 out of 5. Wow. It's getting A's. And these are people having trouble with their service.
Where they're angry.
I mentioned Ramp's self-service resolution rate being 90%.
That's crazy.
Well, Sean on stage today, the CTO of Rocket, was mentioning that the customers who engage with their chat agent are 3 times as likely to complete a transaction and refinance.
3 times?
3 times.
Okay.
And so whether it's sales or customer service, what really matters is, does your agent work? And ours work the best. Number 2 is our ability to serve regulated markets. I was just here in Vegas last week at another conference called Health.
Okay.
I was on stage with a company called Cigna. You might have heard of them.
Know them well.
We serve the mortgage industry with Rocket. We serve banks here in the US and Europe. We serve healthcare payers, healthcare providers. And it's one thing to make a chatbot. It's another thing to replace the IVR system for some of the most regulated companies in the world. And we're really able to do that. And then the third thing is our business model, this outcomes-based pricing. We're really big believers in it. I think it remains differentiated. We think you should only pay us when you're getting value from our platform, and that's pretty unique in the market right now.
That's awesome. And then as you're doing this disruption, as we mentioned, all these other companies coming after you as well, we have to think about moats. And looking at broader AI, people think LLMs at the base layer are going to commoditize, then you have the infra and app layer in between. Where will moats remain in this era of AI?
So I'll tell you where I think the market will end up, and then I'll talk a little bit about the implied moats there. Yeah. So I think history doesn't repeat itself, but it rhymes. And I think the cloud era had infrastructure as a service, which was Amazon Web Services, Azure, GCP, Oracle. And then it had software as a service. So think SAP, Salesforce, Adobe, ServiceNow, and then a huge long tail of startups. I think in the world of AI, you will have the model companies, and they will provide the models that become sort of the infrastructure of AI.
OpenAI, you can plug it
OpenAI,
here.
obviously, I'm a homer, the best. Why use anything else?
Right.
And then I think the applications on top will come in the form of agents. And I think for most of the key departments and workflows, there will be a company that builds an agent or agents for that. So I think if you're a public company, your quarter ends, and then you spend 3 weeks basically auditing your financials. You'll typically hire people to do it, both accounting firms and law firms. It costs millions of dollars.
Right.
There's an agent for that. Let's say you're a CPG company and you have a big supply chain, and all of your suppliers have contracts. But they're not like differentiated contracts. They're just supplier contracts. Right. Why not have an AI agent to review those contracts? Let's say you run a 10,000 person call center and you want an AI agent to pick up the phone, but you don't want an engineering team to maintain that agent. You want your customer service team to be able to maintain agent. There's an agent for that, and it's powered by Sierra. My take is we're going to end up with an agent for all of these key workflows and all of these key departments.
Yeah.
I think over time, if you think of a software as a service company, take any of the Shopify.
Sure.
Would you describe their mode as a technical mode or a product mode? I'd probably describe it as a product mode, and I don't mean to dismiss their technology, but it used to be in maybe 1999, the fact that you could run a database in the cloud was a big deal.
Right.
Now you can go in Vercel and do it in 2 minutes. As technology matures, you end up sort of going up Maslow's hierarchy of needs, but it doesn't mean there's no value. And in fact, I would say, platforms like Shopify are more valuable today in many ways. They have so many features to help you, not just like put items online, but process payments, optimize demand. I think we're going to end up there with agents. And a lot of the agent companies today have to finish that last mile of just making agents work because it's hard. But once that becomes easy, there's so much more value you can provide. And I don't think the idea that every company should make these things themselves, I think is silly.
Right.
The value proposition of, hey, we're going to amortize the cost
Yeah.
of all that complexity on behalf of thousands of clients just makes economic sense to me. And I think the same will be true in this era.
That makes sense. And so you said history doesn't repeat, it rhymes. I think AI rhymes with 1999, which you've said, and I think it's rhyming with 2021 now. Last question before we jump to the rapid fire round. Should we be scared of where we are in the cycle today?
I think we are in a form of bubble. And what I mean by that is I think people are, the way I articulate it is the promise of AI is real. I think we will see the most significant productivity enhancements to our GDP, to the economy that we've seen in generations.
Yeah.
But because of that excitement, it doesn't mean each investment is being made surgically. So the excitement is driving very broad-based investment.
Yes.
So the way I would think about it is if you go back to 1999, if you bought buy.com, you lost your money. If you bought Amazon.com and held,
Right.
it was probably the greatest investment of all time.
And in Cisco, you're flat.
Yeah. And I think we'll end up with something really similar. I think we'll have some generational companies. I think broadly, we will look back and say the excitement was warranted, but it doesn't mean every company will succeed. And I think, in our world, you have a bunch of startups, as we joked, the 12 we walked by on the way here. Some will be consolidated, some will go out of business, and the rare couple will come to be generational category-defining companies, and that's obviously what we aspire to be.
Makes sense. Awesome. Well, Bret, you've made it to the last part of the episode, which is the rapid-fire question round. Didn't prep you at all for these ones. Max, 10, 15-second reply for
Go ahead.
each. First one's easy. Why name it Sierra?
We explored music and nature, found a couple that we liked. Sierra worked with the trademarks and the domain. And I love the Sierra Mountains, having grown up in California.
Beautiful. Triple, triple, double, double, double is dead. Agree or disagree?
I think certainly Sierra's revenue growth has far outpaced what I expected.
Right.
And I think there is enough demand for AI. You can grow companies much more rapidly than you could a few years ago.
Mm-hmm.
I think it's important, though, to look at revenue durability. Are they weekly pay-as-you-go contracts? Are they
Right.
monthly? Are they annual? Is it with small businesses that have a high churn rate? Is it with larger enterprises that have a low churn rate? Is it a deep use case or a superficial use case? What are the switching costs? So I do think you can grow more quickly. I think that metric can be gamed with, I would say, junk food revenue.
Love it.
Yeah.
All right, last ones. What is something that would truly surprise us all about Sam Altman?
Sam Altman is one of the most empathetic and kind people I've ever met.
Okay.
He's obviously incredibly ambitious and known for helping create OpenAI. He is just generally one of the sweetest people I know, and I don't think a lot of people know that about him.
Love that. What about Mark Benioff?
Oh, Benioff. Mark is incredibly funny. I think a lot of people know that about him, but he's a charmer. Like if he gets on stage and he gets in the mode where he starts riffing, you'll be laughing the whole time.
That's great.
Yeah.
All right, last two. First one, we talked about the Niners. What's your prediction for the Niners season?
I think we'll make it to the playoffs and not go very far. I don't think we can get there without Fred Warner and Bosa.
Tough
I
losses.
hope Purdy comes back soon. But I mean, have to be honest though, most fun Niners team I've watched in a long time because there's so much heart and grit.
Love
How
it.
about the Jets?
You know where I'm headed. Two-win ceiling, I think, for us. And I'm happy for
You're
that.
50% of the way there.
Yes,
Yeah.
exactly.
Yeah.
A win every 8 weeks.
Yeah.
All right. And then last question. We're actually starting a new tradition on this podcast today where you will get to ask a question to our next guest. I don't know who that guest is going to be yet, but almost always a founder, C-suite of a transformational company. What would you want to know?
How many enterprise software companies started over the past 2-3 years, like since LMs came out, will be worth over $50 billion in a decade?
I like it. Bret, great to have you on today's episode live at Money 2020. And thank you to our large audience behind us joining us live. Enjoy the rest of the conference, Bret.
Thanks for having me.
Thank you.